Hello everybody, Cantonese Cat here. I'm going to look at a chart of SOFI using different indicators. One way to look at SOFI is just like any other stock. One of the favorite indicators that a lot of traders use is the moving average. So I just have like the simple moving average that I kind of set alone here. Some people like to look at 5, 9, 13, 20, 30, 50, 100. It gets pretty complicated. I usually just want to choose like a few, and I used to be very much into moving averages until it really starts to hurt my head because a lot of times they may respect it, but next thing you know they don't. It can be used as a good trading tool, but there's no guarantee. It only gives you kind of like a rough idea and tells you how the trend is going, right? So it doesn't really give you as good a resistance level they can go by, and it moves every week. It moves every day, depending on what time frame you're looking at. It even moves every 4 hours if you're looking at that time frame. So it's a little bit annoying to try and have a level in mind, and it's a little bit difficult to kind of visualize. Now, if I want to make sense out of the SOFI action using moving average, I can. I can talk you through. It's going to get pretty complicated. It's going to sound like I'm making things up, right? But it actually makes a whole lot of sense. So if you look at moving averages, the whole idea is if it's downtrending, usually it just tells you that the trend is down, right? So it's going to most likely serve as a resistance when the price is trying to break above it. Usually it tends to serve as a resistance because the trend is down, right? But the more it tries to break above, the more likely the trend is going to change. The more likely it's going to try to turn around. The more it attacks it, the more it touches it. And eventually when it touches it so much, it becomes a trend change. That's when things generally have a better chance to break above, right? So right here, the gray area, this is the 20-week moving average. As you can see, initially, when you had this pretty bad downfall, it didn't even touch it. It just kept going down, down, down until it gets to around August 2022. That's when price decided that, hey, it's time. It's getting starting to form a little bit of a base here, and the 20-week moving average is starting to curl down a little bit. It's time to try and attack it to see what happens. Well, guess what? It's doing negative sloped, right? So you're going to have a hard time kind of break above of it. Next thing you know, sure enough, it tried to break above, but it couldn't use it as a support. It back tested and it kept on going down, down, down. Back tested right here again, failed. Back tested right here again, failed. And guess what? Right around here is really when all of this, the past 20, 30 weeks or so, is really starting to form a base. And it's starting to curl into a little bit of a trend change here. Price found vulnerability here, attacked it, went back above, and it even tried to break above 50-week moving average right up here. Initially, it kept up and it tried to back test just to make sure that you got a very nice floor right here. And of course, because the 50 is negative sloping, it went back down. And guess what? It went back down, but the 20 is now changing trend. 20 is now serving as support, is helping kind of push price up along here, but then the 50 is still negative sloping, right? So it spends some time here trying to figure out what it wants to do, It looks like it's about to want to break above. And you actually have this kind of 20-50 cross right here, which is generally considered to be pretty bullish. And sure enough, price went up and became very bullish eventually, but it kind of had a little bit of fake out because it went back down. But because both of these moving averages are starting to curl up now, it served as very, very poor resistance. And as it went down, it still had a pretty good chance for it to bounce up. I remember buying over here, and it was absolutely devastating. But I remember buying here because I saw a bullish cross here, and because they still look like they're expanding. It still looked like there's a pretty good, risk-reward ratio right here. And sure enough, as the price bounced up, it slides through it like Swiss cheese going all the way up there because both of these moving averages are pointing up. So they're not going to serve as very good resistance if it's curving the other way, right? As a matter of fact, when it bounced all the way up here, next thing you know, guess what? It found resistance at the 100-week moving average. As you can see, 100, it just kept hugging the 100 moving average all the way down because it had a hard time really breaking through it because the 100 moving average, even though is not as negative sloping as it was over here, is still negative sloping, and therefore price is going to have a hard time really truly breaking above it until it starts to flatten, right? And what you're seeing here is that you start to have a bullish cross even with the 50 and 100. And matter of fact, because of this cross right here, price was able to break back up above it. And right here, you're starting to have all of these positive moving averages with the 50-week right here serving as support right here and serving as support right here, helping push the price up. During this volatility, especially during this downtrend here, the 20 starts to curl down. But eventually, as the price continues to consolidate here, now it's starting to curl up again. What we end up having here is, and this is very important, you have a pretty strong weekly bull trend. 20 is pointing up, 50 is pointing up, 100 is really starting to flatten, 20 is about 50, and it's about 100, and price is about all these moving averages. This is usually a very good start of a beginning of a pretty powerful bull trend. And when you're seeing all of these, longer term weekly moving averages really starting to bunch up and have a change in trend, that's when you may be onto something relatively bullish over here. Now, I just spent the last 5 minutes talking about moving averages. That's what a lot of traders look at. It confuses the crap out of them because does it serve as a resistance? It may not, right? It helps you look at trend. It doesn't necessarily help you look at resistance and support, but it's still very helpful, right? And I remember kind of looking through a lot of these moving averages, and it just kind of get my head hurting, right? Next thing you know, I started getting introduced to the idea of another, more powerful indicator that can tell you a little bit more in terms of what's happening, and you only have to just look at it once, and you don't have to worry about thinking about too much. Matter of fact, this is exactly what the Ichimoku cloud stands for. Ichi stands for one eye. It just basically means, or one look. It just basically means that when you look at it, you're supposed to kind of tell that and get a pretty good idea about what's happening. When I pull up the Ichimoku cloud, initially it's going to look very intimidating. Initially it's going to look pretty complicated. I don't want you to be intimidated by this. All of these lines right here, they're basically 4 different lines. You have the red line right here, which is the Tenkan. You have the blue line right here, which is the Kijun. And then you also have 2 leading lines, span lines right here, and they form a cloud, right? The cloud is probably the most important thing here, but basically don't be intimidated by any of this. It does tell you the trend, because the Tenkan is a leading indicator, and if Tenkan gets above Kijun, that usually tells you that you have starting to have a bull trend, because most recent price action is stronger than the past price action if you use a lagging average, if you will, right? I mean, I can show you in terms of how all of these are being calculated. You can just look at Investopedia. If you want to just look at the formulas for all this, it's pretty non-complicated. It basically look at a 9-period high plus 9-period low and then divide by 2. And because it's looking at a period high and period low, the volatility of the Ichimoku cloud is just not going to be as high. There's going to be a period where that period high and period low within the 9 is going to be the same, unless the price impulsively breaks above or below, right? So usually it gives you a little bit more steady kind of line instead of looking at these curves, which really hurts people's eyes. And when you start off all these curves going around, this chart starts to look a little bit more dirtier. It's going to be a lot harder to look at, right? But if you look at Ichimoku cloud, again, you have the Tenkan and Kijun line, which is the basis to do calculation to form the cloud, right? Again, this is the Tenkan and this is the Kijun, right? And if you look at the 2 lines right here, again, Tenkan basically stands for conversion, and the Kijun stands for base, right? And then you also are going to have the leading A and leading B. Leading A is going to be this one right here, whereas leading B is going to be this one right here. And both of those also have their own calculations here as well. They're basically based on even longer averages, which are not moving, but period averages, so they're going to be a lot more stable. And right here, the leading span A is going to be more based on the Tenkan and Kijun, or conversion and base. So all these ways to kind of calculate, it's not supposed to be that complicated, because basically all you need to look at is this, right? You don't even need to. That's the thing. If you ever go and learn like physics, You can talk about the theory behind all of this. You can talk about all the theories behind this, theories behind that. But at the bottom line, like once you go out to work, once you actually use these things, it doesn't matter in terms of theory. It's important to know the theory so you know what you're looking at. You have a better idea of what you're thinking and why it is that it shows certain things, right? But when you actually use it in a practicality sense, once you get the hang of it, once you've seen like thousands of charts with these kinds of things, you don't need to think about too much about how to recalculate it. You just need to know a couple things. One, actually, this is very simple, right? One, if if the Tenkan gets above Kijun, there's a potential chance for you to have a bull, like a little bit of a bullish kind of trend here, right? And if the Kijun is still above the Tenkan, you have more of like a bearish trend, right? That's thing number one. If they cross, you might have more of a bigger trend change, right? And the higher time frame, the cross, the more powerful it is, right? The second thing you have to look at is the cloud. All you have to look at the cloud right here is you can use the cloud just like any moving averages, just like any horizontal lines, just any vertical lines, diagonal lines, whatever you want to use. You can use the cloud as a resistance or a support level. That is all you have to really think about, right? The cloud is calculated using these, actually not too complicated formulas, but it actually gives a pretty good idea in terms of what the price action is, how it's been, going through, what could potentially be resistance moving ahead, and what could potentially be good support moving ahead. The general idea is this: when the trend is pretty vicious in the past, the cloud's going to be pretty thick. When the trend is very, very bearish, you're going to have a very thick red cloud right above that's going to need some time to kind of break above it, right? And when the cloud starts to get green, that's when you're starting to have a little bit more of a potential bullish trend coming, right? The reason why is because the redder it is, the harder it is as resistance, and the thicker it is, the harder it is as resistance. But it actually is going to be, in general, it's going to be pretty decent support. Whereas if you have a green cloud over here, generally it's going to serve as a lot weaker resistance, and it's going to serve a little bit as a stronger support. And the thinner is, the less likely for it to be, that strong. But that's kind of how I think about it. You don't need to think too hard about it. If you look at the price action of SOFI here, I want to just show you. I posted about this earlier too. I don't want to complicate it with all these base and conversion line on the weekly chart. It can get a little bit more confusing. I just want to look at the cloud. If you just look at the cloud, what are you seeing? You're seeing a few points right here, right? You're seeing a point right here where price trying to get back inside the cloud and got rejected. You see another point right here where price trying to get inside the cloud and got rejected again, right? And then the third try, it moved all the way up to the push to the top of the cloud, but it got kind of rejected at the top of the cloud, right? So this is rejection number 1, 2, and 3. The more price action attacks a resistance level, the weaker the resistance level is going to get. Because the price has been working so hard trying to break above the cloud, eventually it broke above it on the 4th try, right? This is the 4th try. Eventually it broke above it. Went back over the cloud. Great. Well, how do we know the cloud's going to be good support? The cloud is negative sloping. The cloud is red. The cloud is pretty thick. Great. But how do I know that this is going to serve as pretty good support moving forward? What if this is just a false breakout? Usually these things come with a back test, right? So with the back test, you end up having back test number 1. It bounced a little bit, right? But the problem is it wanted to do yet another back test, right? So it actually formed a little bit of a channel down here. And eventually, I remember posted back here in November, I was like, it's going to touch the cloud, it's going to touch the cloud, it's going to touch the cloud, it's going to bounce from it. And when it bounces, it's going to make a pretty impulsive, push up. Sure enough, it really just touched right here, and it bounced pretty heavily all the way from like 6 something all the way to 10 something. It got everybody kind of excited, right? Including myself. I'm guilty of it, right? But when it went back up here, it wanted to do a third back test. And this is what's brutal about it. It went back down here to do a third back test. It found support. But when you have something like this, even when it found support, when the cloud kept going up, you would imagine the cloud would be able to push the price up. But it did close 2 weeks after that below the cloud. And I can't say that I wasn't worried about this a little bit. It did get me a little bit concerned, but hey, it eventually went back up, right? Because the cloud is green, green means go. It's going to not serve as a very good resistance level. It's going to serve as a better support level than it is resistance. So price went back up, and guess where we are? Right now, we are trying to break above this cloud right there. So 3 and 3, this is what I want to try to show you. The cloud right here serves as resistance 3 times, right? Bottom, bottom, top. All of these are, really all of these are really trying to test the resistance, trying to push through, right? Got rejected at the bottom, got rejected at the bottom, got rejected at the top. Well, went back and for a back test, right? Back tested the top, back tested the top, back tested the bottom, right? So bottom, bottom, top, 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 bottom. Resistance tested, back test happened. Resistance tested 3 times, broke out. Back test happened 3 times, found support. I think it's going to break out of here. And I think it's going to break out of here pretty soon. And when it breaks out of here, because it's already found a very, very good base over here, the move could potentially be very powerful. It could potentially go up to around here. I'm going to show you a couple other things too in terms of price prediction. Let me get rid of these little circles. I like to keep my chart clean. Now, one way to really try to figure out where the level it would go to, instead of looking at the cloud, you can look at the volume shelf. The volume shelf is going to be also known as the anchor volume profile. You click on it and you try to find a price where it might be relevant. All of these bars right here on the right, they're basically just telling you where the resistance and the support levels could be, because these are the volumes, or usually these price levels that they try to hand the most, right? As you can see, the price actually got above this pretty heavy area right here, and I think price would like to challenge these different volume sets up here, and I think it might be getting ready to do so pretty soon. Within a matter maybe next couple months or a few months or so, it could really try to break above. And I think the next, important volume shelf, maybe around here, maybe around 12 or 13 or so. But I really think that the bigger one's going to be up here, which at the bottom of that is going to be 14. I think price is going to have, some pretty decent movement over here soon. And it might feel a little bit short-term resistance right around these, 12, 13 levels. But I think eventually it's going to hit 14. And this is the spot that I think you might end up spending a little bit more time at, because 14 was served as a pretty strong support all throughout 2021 before it really broke down. So I think 14 is going to be a level that we're going to have some hard time breaking above once we get there, is what I think. Although the volume show is really not as thick as I thought it would be, because the price really spent majority of the time down here over the last 2 years. So this is kind of what I'm seeing. I do want to show you a couple other things here too. In addition to showing you the moving average, and in addition to showing you the cloud, I want to show you one thing that I absolutely love, and all traders and all investors should pay attention to. And this is something that is just so simple. I don't know why people don't look at it more, is volume. Now, to look at volume tells you, usually the volume kind of reflects what the bigger money is doing. They're really the ones that kind of push the stock, right? So the higher the volume, it tells you where the trend could potentially be going. And when I've been looking at volume for a very long time, the key things I look at volume is I try to find the trend, right? And when it gets down to here, you can see that there's a lot of huge selling right up here, and vicious selling, right? There's a lot of selling volume down here, but the selling volume eventually dwindles, and it really stops right around here, right? This is really when I think you're going to have the first round of kind of like a seller's exhaustion right here, right? And sure enough, as you have seller exhaustion, what else is going to end up happening during this time is you also have some of these increased buying signals right here, right? And you have these increased buying trend signal that goes along with buying trend, increase volume, right? And you're going to have some downtrend right here. It's going to have a decreased volume over here, and it's going to have a decreased volume over here. You're going to have an uptrend right here. You're going to have increased volume up here, right? You're going to have a downtrend. You're going to have decreased volume. And then you're going to have an uptrend. You're going to have increase in volume, right? I'm just showing you what I'm seeing here, right? Downtrend, decreased volume. Uptrend, increased volume. Downtrend, decreased volume. This is very much an anomaly, because if you look at it, even though the candle is red, the price of this candle actually closes above this candle right here. This is actually a little bit of an uptrend. This is from the last earnings where there's a lot of volatility that had happened here. But the overall trend, majority, predominantly speaking wise, you have a lot of buying volume and you have a lot less selling volume as time goes on. This tells me the trend is more bullish, and this tells me that the whole thing is more of an accumulation range than it is a distribution range. That tells me that big money wants to buy, wants to get in, and and the volume is really what really tells you a lot of things. I'm going to show you one indicator I absolutely hate on the weekly. I'm going to show you this indicator that nobody should ever use, which is, well, I'm not going to tell you what to do. This is the weekly MACD. I hate the weekly MACD. I'll show you why. It's very much a delayed indicator, right? It's just so delayed. Like when people look at MACD, what they want to do is they want to look at trend change, right? They want to see when there's a cross right here, which can serve as a signal for you to buy. When the top is starting to trend down, you want to sell. When the top is trying to trend back up, you want to buy, right? So this is a little bit of like a bearish cross here. This is a little bit of a bullish cross over here, right? The problem with MACD is this. Let's say if you sell here because you see a MACD cross to negative, you would have sold closer to the bottom because it's so delayed, right? Let's say if you're buying right here when the MACD crossed back up, you've already missed like half the move, right? And then another thing is also, like, let's say if you sell right here at the bearish cross, you might be able to save yourself from some of the loss over here, but honestly this move is not that big, right? And then same thing here, if you wait until the cross over here, I mean the price is already getting close to the top. I just don't like this weekly MACD indicator thing. If anybody tries to sell you on MACD on a MACD cross that's coming on a weekly time frame, be very skeptical. I don't like it, and I just showed you why. Anyway, as I showed you all these indicators, I just want to show you a couple of things. One is that I think it's starting to have a bull trend based on moving averages. Two is I think that it has done plenty of backtest and support. I think it's getting ready to run. And the third thing is that the volume has been very, very helpful in terms of telling you whether or not this is accumulation or not, because of all these increased volume that has been happening for over 2 years now. It's been over 20 minutes. Thank you for listening to me blabbering about SOFI again. I will keep talking about SOFI. I can do this all day. All right. You guys take care. Bye.